Welcome back. Mozambique will default on another Eurobond repayment due this week owing to economic and fiscal problems that gives the state extremely limited capacity to repay any money this year. And that's according to the Finance Ministry. The repayment on the 2023 Eurobond, the $850 million tuna bond, had been due on July 18. And South Africa's Reserve Bank is expected to leave its interest rates unchanged at its July 20 meeting, but economists expect a dovish statement as the bank gets closer to its easing cycle. Economic growth in South Africa will be weaker this year after the country slipped into recession in the first quarter, and with inflation easing, and interest rate cuts is expected in the first quarter of next year. At 5.4% in May, inflation has been slowing after a drought last year and will probably average 5.4% this year and 5.3% next year. And the National Bureau of Statistics Monday released Nigeria's June inflation, indicating a drop to 16.1%. And what does this mean for the domestic commodities market? I'm being joined by a research analyst with financial derivatives company, Mubemi Yorin. Good afternoon, Mubemi. Thank you very much for having you in our studio for today.
Thank you for having me.
Right. Now we saw the figures released by the National Bureau of Statistics for the inflation number 16.1%. Now, and that's the fifth consecutive time the inflation has actually, come down. So what's the implication of this ease on year-on-year inflation for the domestic commodities market?
So inflation, by definition, is the rate of increase in general price levels in an economy. So this means that we would still see an increase in price levels, but the pace at which they would increase would reduce compared to what they were last year. And also we see that so it doesn't necessarily mean that there will be a reduction in price levels, just the rate at which it will shoot up would slow down. And if we look at inflation, you have 4 indices, and of these 4 indices, the food index was the only one that increased, but the other 3 dropped.
Yeah. Now, the chart, looking at the charts, the price charts, we can see some kind of violent swing in prices of some commodities, just as you said, the food index going up. We've seen some price increase in tomato, palm oil.
Yes.
Right. Now, what is the impact of these swings on the inflation numbers?
So the first cause of the violent swings we see is the seasonality. So right now we are in the planting season, and this means there is a reduction in supply. So economics tells us that a reduction in supply will lead to an increase in prices. So this is how the violent swings affect the inflation. Because we're in the planting season, we do not have as much in the markets, and prices will have to go up. But in the end, come the end of the third quarter and the beginning of the fourth quarter, we should see a harvest, because that will be the harvest season, and we should see an adjustment in prices. And we have more rain this year than we did last year, so we expect to see a bumper harvest, which would further adjust price levels.
Now, and then the issue of tomato prices. Tomato currently is selling at 28,000. What's driving the price of tomato as it is now?
So the current price of tomato is actually more than 300% more than what we saw at the beginning of the year. And again, this is with seasonality. So most of the tomato we have in the markets, most of our supply comes from the north, and this isn't the harvest season. So there's a shortage in supply as well, and we would see an increase in prices. Most of the tomatoes you'd see in the markets are from the south, and they are not as much as the ones coming in from the north. So we would see this scarcity.
So basically, one will start having the bumper harvest.
Yes,
so we'll
so
begin
this
to
bumper
see
harvest,
more tomato coming from the. Now, government is looking at banning the importation of rice. That should be by December. Now, how will this affect the commodities markets, both price-wise and, of course, level of consumption?
Okay, so the government announced that Nigeria aims to be self-sufficient in rice production soon. We don't know how soon. And this is to increase the level of consumption of local rice. But this this is a long-term plan. We wouldn't see an influx of local rice in the market tomorrow or this weekend. So if the government makes this ban now, it would definitely increase price levels because demand would exceed supply. And this would, so when demand exceeds supply, there will be shortage in supply and price levels will shoot up. Most times, if you go to the market, you see more of imported rice. And this is Nigerians' preferred taste. So Nigerians will also have to adjust to the new local rice we're consuming, or we would have to consume. And if we ask ourselves, is there any real substitute for rice? We can't really say yes to that. As we know, Nigerians love rice or different types of rice. And if you look at the likes of pasta or couscous, and those things are even more expensive than rice. So you would say that level of consumption, rice is an inelastic good, so the level of consumption will drop, but not as much, but it will still drop.
All right, so let's look at your general outlook for commodities prices, going forward, particularly in the next quarter.
So, as I mentioned earlier, we expect to see a bumper harvest. So, prices should adjust more. They should. The rates of inflation should reduce.
Begin to come down.
Yes, begin to come down. So when we start harvesting, there will be more supply, and you'll be able to meet demand, and prices can move down. We see some people have already started making plans for the New Yam Festival and those kind of things. So it helps prices to come down. However, there is a bit of a risk because the rains are really heavy these days, and that can be good for planting, but it can also damage some of the crops. So if those crops get damaged, the prices would increase. But we expect to see a bumper harvest, which should lead to reduced prices.
All right. So it's just for us to look out for those risk factors.
Yes, the risk factors.
There. Thank you very much, Bubemi. Orishe Bubemi. It's actually a tongue-twisting name.
Orishe Bubemi.
Thank you very much for coming on the program.
Thank you very much.
Right, Orishe Bubemi is a research analyst with Financial Derivatives Company here in Lagos. We'll move on now, still on commodities matters. South Africa's Anglo-American Platinum expects half-year profits to fall by as much as 67% due to a stronger rand, lower sales, and post-tax impairments. The world's biggest platinum producer forecasts headline earnings per share at 210 to 335 cents per share for the 6 months which ended on June 30. This is down 47 to 67% from restated 2016 earnings of 629 cents per share. Headline EPS strips out certain one-off items and is the main profit measure in South Africa. Headline earnings and basic earnings were also hurt by an attributable post-tax impairment of 2.2 billion rand. And that's a wrap on today's edition of the program. Thank you very much for watching. I'm Chimeze Obi.